Hello and welcome to today's video on high altitude investing. Today's VIP video is going to be on risk and reward ratios, how to calculate them, and some tips I have. You know, doing this along with your entries can really help get you better entries, so it's a very important thing to understand, because with this method you don't have to win exactly, you could win 25% of the time, but because your winners are so much bigger than your losers, it doesn't matter. So, it has its place, it's useful, and I am going to be showing you how to use it today. So let's get right into this. Let me switch to my screen here. Awesome. Cool. Is that working? Yes. Alright, so what is risk to reward? Well, it's basically based on where you set your stop loss, where your entry is, and where you're trying to exit. Okay? So the easiest way to understand it in layman's terms is if you're willing to risk less than you're trying to make, you don't have to make it, you don't have to make it 50% of the time plus. You can only make it 25% or 33% or whatever percent you really want to, and you can still be a profitable trader. Now, it does mean that technically, if you're risking less, then you have less chance of being right on the trade, unless you have your trading plan in place and you know how to make the trade, right? Because if you're not willing to give it as much space before it closes your order, then here, I'll just explain it visually here. It's much easier. Okay, so let's pretend that I'm willing to risk about, I'll just draw the little box here first, and then I'll show you how to do the actual risk to reward. Let's say I'm willing to risk about this much, okay? So I'm willing to set my stop loss this size of a box below my entry point. So let's say we entered right here. So the center is our entry. That would be right here. So this yellow line is going to be our entry point, and that red box is our risk. Okay? And then let's say that we're trying to take profit on this trade up here, this fib right here. Okay? So that's how much we're willing to, or that's when we're willing to exit this trade into profit. So here's our entry. Here's our risk we're willing to take, this red box, and then this green box is when we're ready to take profit. So, in theory, this means that if we lose one trade, okay, so I'm going to copy this. I'll just put this on the side here. So we'll count these little boxes as trades. Here's the first one. I'm just doing it because I wanted one below it. So, okay, so here's our first trade. Here's our actual first trade, since the bottom one's just like risk, right? So if we take one trade into this, and we take a loser, okay, we can take one loser, and then we could take another losing trade. So say we lost twice, okay, and then say we got a winning trade afterwards, okay, so let's clone this. We'll just see over here on our right side is our losses. So here's our percentage loss in these trades so far. We've made two trades. So our bottom point is here. I'll put little numbers next to them. So here's our first trade. Now here's our second trade. Now let's say that we made a third trade and it was in profit. Okay. So let's go ahead and copy this box. Now we can make a third trade and it's in profit, and because of that, I'll just keep it on this side. Because of that, if we win on the third trade, we don't have to, we've only lost this much, okay? We've only lost 2 red boxes. So that's how much we're willing to risk, is this little bit. But if we won one of these trades, we would win this much more. So it makes up for everything we've lost. And that's basically like a visual way to explain how risk and reward works. Now let's get into like the nitty-gritty of how you can actually use it on a chart, okay? Because that's very important. Okay, so let's say I'm looking for an entry right now. This is clams, 30-minute candlesticks, Heikinashi, with a 60 to 40 input on my RSI, and I am looking at the past day or two here, a few days, and you know, we're starting to see some pumping up here in clam. I mentioned it as a pretty good entry somewhere around here on the VIP Discord chat. Now, let's say that we are shooting to enter in a low risk area. So we're shooting to get our best entry right now. So let's just say that, you know, we expect clams to pull back to this level right here. So if I expect clams to pull back to this level, so that's my target entry, I will grab my over here on the left side, you click on, again, this is coinigy.com. I highly recommend using it. It has extremely good tools for trading, and if you really want to get good, I think that this is almost necessary. So I click on long position over here on the left side, and then I'm going to click right here. This right here is my center. So that's the center of the thing is our entry. And then I'm going to click on my crosshair here. And then let's say I'm willing to take profits at, I don't know, 40% of the trade. So do you see our target right here on this risk to reward? Let me zoom in a little bit here, make it a little clearer for you guys. So you see this target on our risk and reward. We want to drag this up. And, you know, let's say we're willing to, we're trying to shoot for a, let's say that we're a 4-to-1 risk to reward ratio, okay? So that means we can lose 4 times or 3 times, and then we only have to win once to still be to still be profitable. And to break even, we could lose 4 times and win once. Okay, so let's bring this up. We want a 4-to-1 ratio. But we want to give ourselves some, you know, some room to breathe on our stop loss, okay? Remember, this bottom part of our risk to reward is our stop loss. So let's put our stop loss at this heavy wicking spot right here. Okay. Oops. So that's about a 3.2 ratio. So let's see if we can give ourselves a little bit better of a ratio here. Let's go with about 4. You know, and the ratio and stuff is really up to you. It depends on what you're willing to do as a trader and as a person, and how long you're willing to wait, and it really depends on your trading plan. So it's something you want to develop over a long period of time, right? It's not something you just want to automatically decide, oh, this is my risk to reward ratio. You want to give yourself a little time to develop and adjust your trading plans until you find one that you can actually work with. All right, so that means that we would take profit at 28% from our entry. You can see right here on the top of this, next to the target, it gives you a percentage of where you would take profit from your entry. So this is much easier for calculating percentages too than just using a website. And then if you have your stop down there, you're trying to get stopped out at 7%, okay? So you would get stopped out at a 7% loss. And then on top of this, you can use risk management. So only use, you know, 5% of your total account balance on any one trade. And with these rules in place, you can have a pretty good, you know, a pretty consistent trading plan, and you can kind of get to know these markets. And risk to reward, the reason it's so important, in my opinion, is because it helps me find entries better. See how clear this is? See, I'm trying to get a lower entry because I am invested in the idea of a better risk to reward ratio, because entry is really key for your risk to reward, because, you know, you don't have that much room before you get stopped out. You're thinking in bigger terms of profits. Now, you know, some people trade 50-50 risk to reward. So that would mean that you drag this stop loss down at 28%, And what that means is you have to win 50% plus of your trades to be successful. All right? So you win, if you lose a trade, you lose 50%, or you lose 28%, but if you win a trade, you win 28%, so you have to win 50% plus of the time. So that's basically the idea behind risk to reward. That's some things I take in mind. Personally, for crypto trading, I usually do between a 3-to-1 and a 4-to-1. Again, it really depends on your trading style and what you're willing to do. Some people do better with a little bit more risk to reward, and they just get more, they get like 52%, 55 or 75% would be, really optimal, but they just get a higher number of success percentage, where other people who aren't quite as aggressive are willing to, lose more trades, but the ones they win make up for it. Well, it really depends on your, how aggressive you want to be and stuff like that. But that's how to use risk to reward. I hope that you learned something in today's VIP video. Let me know if you guys have any suggestions or ideas for videos. Thank you for tuning in, and as always, stay profitable. I'll see you guys in the lounge.